pursue these exciting technologies, as well as capacity building. So we believe both the support that Carol mentioned that is critically needed to face these sometimes less than enabling environments and help these businesses be successful, plus the capital to really fuel the engine of growth. So that's Accion. What's Frontier? Frontier Investments is the fund I manage. It is wholly sponsored by Accion International. The idea behind it is really to reinvent the business model for microfinance. So as was mentioned earlier, microfinance is a very high-touch model, the very endearing stories of loan officers going out, bringing up usually groups of women and men together to help them start their businesses. There's not a lot of technology involved today, and in fact, it's one of the great challenges because it keeps costs very high. So one of our motivations for pursuing a new fund to invest in these enabling technologies is to help bring costs down and also to radically improve the quality. So you heard today mentioned not just business loans, but peer-to-peer transfers, bill payments. If I asked you, if we're doing surveys, how many of you have a small business loan? Bet you not many hands go up. If I asked you, how many of you have a savings account? How many of you have insurance? How many of you have a way to pay your bills electronically? So all of you raise your hand, and none of the services I just mentioned are available to the poor, and that's a problem. So as inspiring as the microfinance story is, there's a lot left to be done, and that's where Frontier comes in. So Frontier invests in the adjacencies around microfinance, and I'll talk about each of them. Technology, basically those interoperable platforms, Carol did at the end of her presentation, but those, that whole merchant acquiring system and having it be interoperable, that's critically important. Today you have one business model, the Visa model, where the merchant pays for the privilege of accepting a card. That doesn't work in emerging markets at all. And it's why, and again, I hope there's no one from Visa here. We work with Visa, we're very supportive of them. But that model is not applicable in emerging markets where a small merchant might earn pennies on the dollar. Their margins are so thin, they have no way to pay that merchant fee. So understanding the back end and how we can create different interoperable platforms so that so we can basically grease those wheels. Distribution, that's where mobile payment would be for us. Distribution, what we call distribution, is what is commonly termed, to borrow a phrase from our colleagues at CGAP, branchless banking. So in that would be mobile banking, cards and point of sale, ATMs. I will tell you right now I'm technology agnostic, and while I believe powerfully in the potential of mobile, none of our investments today are mobile banking, and I'll explain why. And I don't think that's anything about the potential and how powerful the technology is, but we have to remember again, what does that environment look like? What kind of connectivity, what kind of retail system is there, and what technology is best. And I really appreciate the organizers of this conference for starting with Jan, whose blog I follow religiously. I think he's fantastic. And really beginning with the user and understanding what does the user need and how can technology serve that. We see a lot of technologies looking for a problem to solve, rather than beginning with the problem and finding a solution. The last sector we invest in is what we call new financial products, and that will be the bill payments, the insurance, the housing, all those services where everyone raised their hand that the poor don't have access to. So we believe these adjacencies perform an ecosystem that we hope will define a new business model for microfinance that will be radically powerful. Let me go to the next slide. And just say again, last thing, then I'll talk about mobile. We are looking for best in class. So one of the reasons why we haven't done a mobile solution yet is we're looking for business models that can port to different countries. OboPay has plenty of capital, and early stage equity funding like ours wouldn't, but that would be a great model of a company we'd like to fund maybe 5 years ago if we were around. The idea of finding a model that can is versatile enough to work across geographies, across market circumstances, looking for great management teams, everything that an early stage equity investor would look for, as well as a disruptive technology, meaning we want to see technology that not only tells a good story, but actually has some traction in the market that can show clients are buying it, that clients believe in the value proposition and are willing to pay money for it. What we offer is basically all the resources we have with Accion. Accion has feet on the ground in 4 continents. We have a history of building successful financial institutions that serve the base of the pyramid. We have domain experts, so we have on our team technology experts, credit scoring, channels, folks that we help because, again, as I mentioned, we don't want to only offer capital to our portfolio companies, but the capacity building, the domain expertise that will help them be successful. So let me say why we haven't, we're looking at a few, and in fact, we just did an investment, literally closed last week, in Latin America that is a card-based system, but the platform upon which is interoperable, and in fact, they're looking at hooking on a mobile solution. So I put it up there because I think it explains something that, again, I think was very articulately mentioned in previous presentations, the power and the importance of having a platform that works with the versatile technologies, recognizing that GPRS isn't everywhere. This happened to be in Peru. It actually has a very clear regulatory environment, very good connectivity. So it had all these criteria for success that made the investment easier, that don't appear in many of the countries where we work. In Africa, we're looking at two actually, in Eastern and Southern Africa. Again, they would have a lot of the qualities I've already mentioned. Interoperable platforms, very strong agent networks, and I want to talk about agent networks. Agent networks are what Jan called the corner store, those retail branch networks that are out there that provide a critical role. And I want to talk a lot about this because the non-technology, that small kiosk in the area in terms of cash in, cash out, helping you do what Carol called onboarding, what I call user uptake, is absolutely critical. And I would argue that if you don't have that well established, you can't be successful. And the two ones we're looking at in Africa actually have done a great job at that. In India, we're looking at again, a mobile solution that actually has done a great job in understanding how do users use the phone now, and how can we leverage that utilization of the phone. And again, it's a kind of a cute story. Any of those of you who've traveled to Africa or India might have experienced the flash, where the person who pays is the person who calls. So your phone will ring, and it'll ring once, and that's your signal that you have to call the other person back. And I get flashed all the time. I'm theoretically the rich white guy or white person, so I get flashed and call them back. And interestingly, so a poor person knows how to redial the number that appears, even the illiterate ones. And the company in India actually has used that ability, that competency, to borrow Jan's phrase, to basically enable functionality on the phone, a mobile solution. Challenges I mentioned, client uptake. This is a critical one, and I think that pain point, so I used to do marketing, and I would say two things. Whenever you see a business plan that requires behavior change, you have to pause, because behavior change is not easy, and it has to be great pain or great pleasure. So either your value proposition has to be so compelling that the client will change, or the pain's so great that it makes it worth, and we're creatures of habit, so nothing that's different than any of us. Financial services, this is disappointing to me. Many of the solutions, business plans we see are for mobile top-up and for, again, bill payment, but not the financial services like deposit taking or other types of things that, again, really require a bank connection. And that's for a lot of reasons. Part of it is the regulatory environment. Part of it is people feeling comfortable doing financial transactions on a phone. And lastly, agent management. Again, agent is the word I'm using for these kiosks, corner stores. Really understanding how do we create a win for that agent, how do we manage them so that they can bring that quality control that's so important and critical in financial services, how do we retain them, how do we build their capacity. There's a lot in that. So just saying I've identified corner stores, or saying I'm a mobile network operator, I have 3,000 airtime sellers, all of a sudden they can be financial service mobile money transfer agents, not the same thing. So we have to really understand what does it mean to be a good agent if we're talking about mobile financial services. And my last slide, thank you. Just some lessons learned, and I'll be happy to do the Q&A. Because these business models are really emerging, we don't have the business model in mobile banking. I think I really agree with the comment that was said that M-Pesa in Kenya, while an incredible success story, and we should all understand it, we should also understand why it hasn't been replicated. Because a lot of things, I call it the perfect storm that occurred in Kenya, that allowed that to take place. So measuring and monitoring, understanding how is your performance, what's driving that success, agent productivity, size of transaction, type of transaction, dormant accounts. We look at KPIs, key performance indicators, religiously to really understand how is this business doing and how can we help it onto the track of success. Understand unit economics. If I read in a business plan, and again, I don't want to contradict what Carol said about it's all about the network. It is all about the network. And if I read network effect one more time about why they need a $20 or $30 million capitalization so they can build that network and then the people will come, we have to see it work on a smaller basis to show that you've actually developed the value proposition. So again, you can't have a fax with one person. You need to have two people with a fax machine, but you have to also be realistic about how big the network is before you can see those synergies. Partner for agent management. It's really interesting, this agent problem I mentioned. How do you manage these kiosk corner stores? A lot of our portfolio companies, the one we're investigating, actually have outsourced some of those. Again, and to give Visa a plug, one of our companies actually uses the merchant acquirers Visa uses to find its partners, and equipping them with its own criteria about how to identify agents they think will be successful. So again, happy to share about models about how you get good at managing and recruiting agents. Business to business versus business to consumer. The business to consumer models are very hard because you have to promote change one customer at a time. Models that actually bring a partner which they themselves can bring other clients with them, for example, partnering with a bank, partnering with a mobile network operator, a lot easier to create that network effect in a cost-effective way. And finally, building in flexibility. I mentioned we're technology agnostic. We really believe in the potential of mobile, and I hope by this time next year we'll have some mobile logos on our website. And we think other technologies, cards, et cetera, are critically important part of the equation as well.